Hello, this is Mike Swanson. I run the website wallstreetwindow.com, and I'm going to do a live stock market, stock trading session with you today. And one of the things we're going to talk about is this morning I looked over, my watch list of my stocks, and I've got 5 stocks, top stocks that I'm going to share with you at the end of this video. Normally, might do this at the start of the video, but I'm going to do it at the end of the video. And there's a very important reason why that's the case. Everyone loves stock picks, and it's all they talk about on CNBC is stock picks. And the reality about stock picks is that a year ago, you could buy just about any stock and make money because of the way the stock market itself was trading, going up over the past 2 or 3 years up until this October, almost every single month. And then when there was a pause, it was just a little bit of a dip, no big deal. So you could, in that type of market environment, you could just about buy any single stock pick, and you didn't have to think about what sectors the stock is in and what the general stock market is doing. Now, this has changed. That doesn't mean you can't make money in stock picks, but to make money in stock picks, you have to reverse the process. You can't just think about the stock pick first. Now you have to think about what is the stock market doing, what are the sectors in the market doing, and what are the right stock picks in those sectors. So you have to actually put a lot more thinking and strategies to use to identify good stocks, because so many of the popular stocks aren't working anymore. They're broken. Stocks such as NVIDIA, stocks such as Facebook, stocks such as Apple, which were so easy to buy and make money in last year, are now broken. And that's why even with this recent stock market rally that began after the day after Christmas, the stocks are still barely even going up. They're lagging the stock market itself. Now, you're at the right place to use more strategy when you're buying individual stocks, because I'm the author of the classic trading book, Strategic Stock Trading, which explains in much more detail how to do this. And I'm going to just touch on some of the principles, and we're going to go through this process together in this video. So we're not in a situation where you can just have someone randomly spit a stock pick out at you and do anything. You have to use a process that will take you to the right stocks. And we're going to do that in this video. And step 1 means thinking about the direction of the stock market itself. So let's get into the charts and start to go through what is actually going on and how to think about what is happening. So here is the S&P 500, and up barely. However, today, which is fine. However, you have to think about the market trend in 2 time frames. The first time frame is the big trend, and it's not up, right? We're not at a new high. We're below the high of October. And the stock market averages are all below their 150-day moving averages right now. And in my work, that means they're in a stage 4 decline, because when you're below those moving averages and you stay below them for more than a few weeks, those moving averages then tend to act as resistance for months to come, sometimes even 1 to 3 years. That's a bearish trend. That's the big picture, though. Because there's the shorter time frame, which is what happened in December, and we have had a rally back up since then. And that's what everyone focuses on, that action. But that action has got to be put into context with that big trend, and that is why random stock picks are no longer working, and so many stocks still are not trading well. And most people, frankly, are not realizing that or adapting to that reality. And to show you evidence of this, this is Robinhood. And I've got a small Robinhood account. I also got a lot of money in a bigger account, but I play with this and I use it so people can follow along with what I'm doing. But this is a list of the most owned stocks in order. Number one, Apple. You see GE, but you see Ford, which reported bad earnings the other day. You see Microsoft, but you see Facebook, which is broken stock. Amazon. It's all these pop. Nvidia, Tesla, which is dumping again. Almost all these stocks are below their long-term moving averages. Only a few of them are strong stocks. So people really aren't adapting to what is happening. But just put in your mind, remember, I'm going to go back to Apple. Well, let's just put Apple up. And it's because it's an example of the type of stocks no longer worth buying when there's better opportunities. So here's Apple, and Apple is, it's fallen a lot and broken those moving averages, and the long-term trend is no longer bullish because of that reality, and that's why it's barely gone up, even with the stock market rally, and it's not a stock to buy. And it's a popular stock for people to buy. It's the number one stock people talk about. If you turn on CNBC today, you're going to hear them talk about it every 15 minutes because everyone owns it and they want to hear about it. However, it's not a stock on that piece of paper I showed you. It's not one of my 5 strong stocks that I can recommend you buy or do anything with because it's broken. And it's evidence number one that to buy a stock, you can no longer focus on the popular things or some hype, but you've got to look at the market, which is broken, and you got to look at the sector the stock is in. And what you want is to find where the strength is. You want to buy stocks in sectors that are outperforming the market, and because what happens is when the market rallies, those stocks tend to go up more than the stock market itself. In stocks that are lagging the market, which Apple is doing when they don't go up as much when the market rallies, and then when the stock market drops, and there will be another drop at some point, those stocks tend to even fall more than the stock market does. In other words, these stocks are millstones on an account. They're destructive and damaging. They do not help you make money. And I believe if you own a stock like Apple, which is lagging the stock market, you may want to consider selling it and finding out what sectors are doing well in this market environment. And that's what we're going to look at now. I use software called TC2000 to analyze the sectors of the stock market and look through many stocks when I do my research, because it enables me to quickly do that. I can literally look through the charts of 1,000 or 2,000 stocks in an hour-long period. And doing that on a weekly basis enables me to understand what is going on in the stock market. It gives me a better idea of what is going on in the stock market than simply looking at, the stock market averages itself and trying to analyze that chart, or looking at an ETF like SPY. Looking at what the individual stocks in the market does gives me a heads up, so to speak, of potential changes in the trend of the stock market averages. So I'm monitoring lots of weak stocks that are lagging the market. And I did a video and big discussion about what those stocks are doing in my private trading group a couple of days ago, because I'm actually looking to make bets against some of these stocks, not now, not today, but at some point probably in the coming weeks, because when the market declines, these stocks will fall more than the stock market. And if you buy puts, boom, those are fast gains, and short selling such stocks is fun too. Not saying now is the time to do that, but I'm watching, what is going on in that arena. But it's stock picks that are really people are wanting now, and because this market rally, and there are sectors of the market that I believe are going to go up throughout this year, even if the stock market goes back down, because they're outperforming the market even on this rally, and they were going up, in fact, when the stock market was falling in the last 3 months of last year. And those opportunities for stock picks, those opportunities to buy something and see it go up, and that's what I'm about, not just buying something like Apple in this type of market. There will be a time to buy Apple, but it may be a very long time for now. And I'm just mentioning Apple as one stock, but there are dozens and dozens of popular stocks that everyone owns that aren't trading right. In a few minutes ago, I showed you some of them on Robinhood. But let's look at TC2000 and what it can tell us about the market. And I will get to the 5 strong stocks in a few minutes. So let me switch, and we're going to load up TC2000. So I've just got to check, make sure you can see it. Okay. So here we are with TC2000. Oh, there's Apple again, actually down today. Once again, even though the last I looked, the stock market was up. But just briefly mention the red line. There's a white line on the bottom overlaying the volume chart. That's on bounce volume indicator. The red line is relative strength, comparing the action of the stock we're looking at with the stock market. And that line, it might be hard for you to see, but it's been going down sharply, which tells us that Apple is lagging the stock market. Now, on the upper left, you see this list of sectors, and I've ranked them by performance since October the 1st up to today. So this includes their performance during the decline, during the recent rally in December. And it shows us what are the leading sectors of the market. And TC2000 breaks the entire stock market down into 241 sectors. Most sectors are red because the stock market itself is still below the 200-day moving averages. Almost 70% of stocks are below the 200-day moving averages. But there are pockets of strength, and it is those pockets of strength in which we must focus our attention if we want to make money buying. And number one is foreign utilities. And there's a small sector, specialty eateries, REITs, consumer services, foreign regional banks, gold. In fact, and gold is something I'm very interested in water utilities, REITs, silver, schools, educational services, soft drinks such as Pepsi, restaurants such as McDonald's is in that list, electric utilities, publishing, more utilities, grocery stores, insurance, security, auto parts stores. These are the top sectors that are up. And once I get beyond that, everything is red since October the 1st. Now, if we switch, just if you're curious, what are the worst sectors? You're looking at jewelry stores, toy stores, personal computers, manufactured housing, oil and energy, construction companies, semiconductors, electronic stores, think Best Buy, dairy products, air services, data storage. But semiconductors, man, that's on the list. That's on the list, and it's one of the most popular things for people to buy. There's like 10 semiconductors, that list of top 100 stocks owned by Robinhood account holders. Those are the stocks that were so hot in 2017, 2018, but they're broken now. And they show me an example. They show us an example of what I was talking about. In the past, you could buy a stock pick without any care of what sector it's in, just because it was popular, just because it was being touted. You can no longer do that. It only will work if it's in the right sector, because we're in a stock market that's broken. The stock market averages are broken. They're below their 200 and 150-day moving averages. And in that type of market environment, blind stock picking will not work. And that's why if you want to make money in this anymore, you can no longer just focus on the stock picks and then think about the sector and then think about the stock market last. You have to reverse the process. Think about stock market, think about the sector, and then think about where the stock is at. And that's what we do together in this video, in all my work. In my book, Strategic Stock Trading, will really help you do it. I can only touch on some of it in a video like this. But what we want to look at next, I want to show you the S&P 500 really quickly. What about that? What are the worst stocks in the S&P 500? Electric utility that just blew up with some very terrible news and almost pretty terrible stuff. Scandalous, really. But NVIDIA, down 45%, a complete and total disaster. And NVIDIA is one of those top 100 stocks people own, with Robinhood, one of the most popular stocks owned by the masses. And it's completely broken. And that's why it's barely even going up on this stock market rally. And the same is the case with Activision. Activision is actually down year to date, even with the stock market rally. And of course, energy stocks are in this list. And so is Apple. Apple down 32.5%. So it's no coincidence that some of these stocks that we're already seeing being the worst performers in the entire S&P 500, some of them are in the worst sectors. Those oil stocks are in the worst sectors. Some of them are just these fad broken stocks, such as NVIDIA, such as Apple, complete disasters. I know you may own an Apple. I know how popular Apple is, but I'm going to tell you again, stay away from it. It's a disaster if you want to make money in the stock. Doesn't mean it's going bankrupt, but it's broken. You don't want to mess with it if you're interested in making money in the stock market. What about the top performing stocks? Well, you got a utility stock that's going to be in the list. Another one, American Tower, SBAC, McDonald's, surprise. It's one of those, that restaurant sector, remember, and so forth. So many of the top stocks in performance are in these defensive sectors. So before we talk about my 5 stocks that interest me, just want to kind of say something about something very important about these sectors. So in a stock market cycle, there is and an economic cycle, for that matter, they're connected. There is a pattern of rotation in these stock market sectors that tell us where we are in the cycle. And when you're at the end of an economic expansion, or a top of a stock market cycle, or even the first inning of a bear market, what you tend to see historically, this is data going back 100 years, and you can find it if you read classic technical analysis books, is that the sectors that lead at the end of an economic expansion, at the top of a stock market, or the beginning of a bear market, are defensive sectors. And that's exactly what we're seeing now with utility stocks leading, with stocks like McDonald's leading. Actually, I didn't show it to you, but Dollar General is now a leading stock. And there's an important reason why defensive sectors like this lead at moments like this, when the stock market has rolled over. And the reason is very simple, that a utility company, a power company, has a stable revenue stream, even if there's an economic recession, even if there's a slowdown in the economy. People are not going to stop going to McDonald's. If anything, there will be people who decide, I'm not going to go to that $10, $20 restaurant. I'm going to go to McDonald's instead for my lunch, for my dinner. So McDonald's actually tends to benefit in times of economic softness and so forth. And what is happening, that doesn't mean we're in a recession right now. What it means is that the people in the stock market making these sectors rotate, making some stocks lead, others lag, what they are doing is thinking about the future and thinking to themselves, hey, we're at the top of a cycle. Things could slow down in 6 months, 12 months. I'm going to get into the defensive stuff ahead of that. And that's what they're doing. And that's the exact pattern that began in the summer of 2000, and it began towards the end of 2007, and it's repeating again. And this is a fact. This is not a prediction of some future event. This is what's happening in front of our face. Now, and I don't know why more people don't point this out, because it's just right there. But it is what's happening. And other thing about these defensive stocks is many of them pay dividends more than you can get in a CD. And that's also a reason why people tend to buy them at the top of an economic cycle, because the people doing that are thinking about interest rates and thinking, okay, interest rates probably aren't going to go up too much more, if at all. And really the more meaningful move is going to be a lowering of interest rates, whether that starts 6 months from now or 12 months from now or 16 months from now, does not matter, because when interest rates start to go down, it makes stocks that pay have high dividend yields with stable earnings, such as utility stocks, more attractive. Because if you know that CDs are going to start to go down in yield, and these utility stocks have stable yields because they have stable earnings growth, people move into them. Or some people, it doesn't mean everybody, of course, but enough people to make those sectors lead and begin to lead at moments like this. And this is exactly what's happening. The exact same thing happened in the summer of 2000 and at the other cycle after that. So the sectors and the rotation of the sectors are sending us a clear message about what is happening in the stock market. It is telling us that even though the market is going up at the moment, and has been going up since the day after Christmas, the market is still, in the big picture, either in the beginning of a bear market or in a major topping phase. We're below the highs, well below the highs, and that is what the pattern of the sectors is telling us. And when you're in a market environment like that, stocks such as Apple, stocks such as NVIDIA are disasters and not ways to make money, and they're going to continue to be that. That doesn't mean you can't make money if you have a day trading system, a system that enables you to beat trading robots. I don't have such a system. I don't. And I have no desire to try to create one, because I like to just make things a little bit easier for myself and buy things that I think are going to go up for months, and not try to beat out computer programs and out trade them. I just don't want to do it. But if you have the ability to do that, go ahead. Go. Don't let me stop you from trying to buy from trading your Apple and your NVIDIAs and other stocks, your Facebooks, and so forth. But I've got I've got more of a longer term time frame than trying to beat the trading robots. So let me show you some strong stocks, all of them outperforming the stock market, 5 strong stocks, and what they can tell us about what's going on. And I actually do have a popular technology stock on this list, and another one that is a popular stock in that top 100 owned by people with Robinhood accounts. So we're going to go back to TC 2000, and I'm going to mention stock number 1, which I wrote about on Monday in a free blog update on my website, wallstreetwindow.com, USDP Partners. Now, this is a stock that's been outperforming the stock market since October, and volume's been ticking up in it. And it also pays a 13% dividend, which is actually stable because it's got a clean balance sheet, and it's in what I call a stage 1. which means if it can clear its highs of February, it's in a position where it could go up for years and give you a 13% dividend. It's a railroad stock, a defensive sector, because railroads are pretty stable with their earnings. They carry all kinds of consumer goods across the country, and energy and coal and everything you can think of. So that's stock number one. Stock number two, and the funny thing about this stock is odds are you never heard of it because they're not going to talk about it on CNBC, or really hardly anyone does, because it's a defensive sector. It's not one of these popular technology stocks. But here is a popular stock, Canopy Growth. And I pointed out, I don't think this is a stock to buy and I don't know what it's going to do for the rest of this year, but it's leading on the rally. It's pausing. If it can break through the high of January, it's got a chance to test the $60 level. But it's showing some strength, and that's why it could pop to 60. And I pointed out, not as an investment, but more as a trading situation. And PayPal is also the stock I was going to mention with you that is popular. It is a big cap tech stock, and it's one of the few big cap tech stocks near a 52-week high. So it has the potential to break out, and as long as this rally continues, can attract robot buying, because robots do go into leading big cap tech stocks. And I think, the stock is likely to attract computer algorithms that do things such as short a laggard like Apple and buy a leading tech stock to counterbalance that position, such as PayPal. So I think this is a stock that could work for the next couple weeks, but something that can work for a little longer is Life Advantage. And remember, when I showed you the list of leading sectors, consumer goods was at that list. And here's one of the leading stocks in that sector, Life Advantage. And you can see it just made a new 52-week high today. But interestingly enough, there's something more important to learn, from this stock, and that is what led to today's breakout. And what led to today's breakout was a consolidation below $15 while the relative strength indicator was trending up for the past couple months. This is a stock that barely fell in October, November, or December when the stock market itself melted down, and the relative strength went up on balance, volume went up. So this shows us that if you look at the stock market action first, then look at sector performance, and look for the sectors outperforming the market when the market drops, then look for the leading stocks in the sectors, you can find gems like Life Advantage. You have to go through that process now to find the future winners and not just buy the random stock pick like Apple. You got to look for what holds up when the market has a down couple months or a down day even, and look for those moments to find what holds up. And that's why gold and mining stocks, to me, are such an exciting opportunity for the rest of this year and probably the next couple years, because they did that during that decline. And now those sectors are basically consolidating, of gold pausing below 1,300 as we do this. Now here's the fifth stock I want to talk about is SBAC Communications Corp. And if you can recall, when a few minutes earlier in this video, when we looked at the top sectors, telecom was at the top, and that's because it's also a defensive sector. People, know people aren't going to stop using their phones. They're not going to stop using their cable, even in an economic recession. And these are stocks that pay a nice dividend. So that's what I wanted to share with you today when it comes to the financial markets, and it took a process for us to get to those 5 top stocks. And I want to share with you before you go, special offer I'm doing, and that's to send you a free copy of my book, or send it to you for free. Strategic Stock Trading sells for $14.97 on Apple, but I want to get it to you. I've only got a limited number of these because they were sitting around my house in a box that sitting there for like a year. And I said, well, let's get these out there to people. And I've also got a special trial to get the book to my private trading service. Goes way beyond these videos like this. And the book goes way beyond this video. And it's not that long. It's only 120 some pages long, but it puts a couple more concepts to use, shows you the indicators I use. It's only a couple. I don't believe in sticking 100 indicators on a chart. That actually makes things more confusing. I believe in simplifying things as much as possible by using a few core concepts and sticking with them, concepts that work over time. And I've been doing this now for over 20 years. And the first building block, which is now so important, is stage analysis. And this book will show you examples of that. And through examples, you learn, and then you can apply that to what's going on in the market now, all year. And market drops, market volatility creates opportunities to make money in an environment that's different from what we've seen in the past couple of years, but an environment that still, if you adapt to it, works. And that's what I'm all about, helping you adapt to these new market conditions. And this book, I think, is the easiest way you can do that. And I want to get it to you. So click the link with this video and grab the book, and you'll get it, hopefully you'll get it. I'll send it to you, and you should get it within a couple of days. The Postal Service does a good job. I got a tracking code and sent a couple of these off, and some people are getting them 2 days later. So some people, if they're on the other side of the country, it was like 4 days. But I want to get this to you. So click the link, grab this book before they're gone, really. And I'll be talking with you later.